Information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hack emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped at the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks.
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
To expose everything you won't admit. And action. This entire video is based on a true story. When I do like motivational speeches or even tell myself like love yourself and you should love yourself.
This is Lily Singh, but to fans all over the world, she's the YouTube star Superwoman.
What if everyone's a girl? Superwoman. I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada was like, Canada, is your daughter making videos? And my mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're going to go to school and then graduate and then get married and then get a job and have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010, and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe. And my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oh, Lily, where the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids.
Good morning, everybody. As you can see, I'm placing a stop on profit for the position we had on euro. As you can see from our ticker at 1.18676. I am placing stop on profit at 1.18626. Okay, place stop on profit, and if it will reach this level, we will collect our profit.
Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name. Maybe there should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up.
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views and the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Position closed on euro at 118.626.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. It's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. That was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now, so we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing in new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world, and I just want to get back to doing business.
It's quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of
profits would help. So at some point, we absolutely have to become profitable, and that's part of the plan.
Do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things?
Well, I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose, out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire. And I think as a company, we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
But some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering in means
to a layman like me?
Crashing. Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, this autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
Will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially, you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back, somewhat reluctantly, back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets, rather than going going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
You
a
had
brand.
that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for
Do you
everyone.
want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people. I mean, that's
telling me.
just not interesting. I do think seriously though that the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point we are leaning forward. In 2018 for us is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy, and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question: do you think that you have solved that part of the culture? But secondly, do you think that is this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers. The tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous, because they have followership within the company, because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem, because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership. So it is incredibly important for the top performers to actually be held to account more radically than anyone else, because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values, and one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and you know, it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company. And to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes, yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in this space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
Live from New York and New Jersey, streaming on YouTube, it is Fed Wednesday, August 19, 2020, and it's going to be all about the latest Fed meeting minutes, I should say that 5 times fast. It was on July 29th, but of course we're just kind of waiting for those headlines to cross, and then we'll take a look at market reaction, Jason.
We will, and this gives us some insights into the thinking and sort of the internal debate, so always eager to dive into that. We'll have our experts along to talk about what they see as well as the market reaction. We're going to talk some politics as well because we are in the midst of the Democratic National Convention, so a lot to get to over the next few hours.
Yeah, busy 4 hours coming up. Let's, though, set the scene and get a check on the trading day. Here is Doug Christner.
Hey, Carol. Well, we know the Fed's backstopping of markets has kept credit flowing, and with government subsidies at the same time kind of replacing household incomes, those are the two pillars on which the equity market has been gaining since those March lows. Today, we are extending records for both the S&P and the NASDAQ comp. S&P higher by 0.2%, NASDAQ composite rising 0.3. The Dow, for its part, is higher by 0.2. Standout performer today, Apple stock is up 1%, giving the company a market cap of about $2 trillion. We've got long-term interest rates coming in ever so slightly. 10-year Treasury here at 66 basis points. Dow Jones reporting trade negotiators from the U.S. and China are planning a video meeting in the coming days. Meantime, the U.S. is suspending or terminating 3 different agreements with the government of Hong Kong linked to extradition and payments derived from shipping. We've got a stronger dollar right now with the Bloomberg Dollar Spot Index rising 0.3%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. We'll be checking in with you throughout the next few hours. In the meantime, this focus on the Fed, it is brought to you by Commonwealth Financial Network, delivering the support you need to enrich the lives of your clients and build the business you've always dreamed of. Visit commonwealth.com to learn more. So we got to set this Business Week agenda, Carol, with these Fed minutes.
Yeah, totally. And I got to say, I just opened them up off the Fed website. So we're all kind of reading in real time at the same time. Here's one headline: Fed officials reviewing the policy strategy in July. Well, yeah, that's what they did. So looking back at it, let's get into it with people who are far smarter than me when it comes to the Fed. Kathleen Hayes is with us, Global Economics and Policy Editor at Bloomberg News. She's on our Access line. And Dave Wilson also on the remote access. He's in New Jersey. He's our stocks editor. But Kathleen, let's start with you. Like I said, we all are opening this up at the same time in real time.
And let's just tell everybody
jumping out for you. Yeah.
Well, first of all, they're usually about 15 or 16 pages, and they're not necessarily. There's a lot in there for anybody. So I know our Fed team in Washington is looking over very quickly. They're saying refining the statement could help improve transparency. So let's put this in perspective. They're reviewing their policy strategy at the July meeting. Maybe if they refine the statement itself, it can improve in transparency. Now, everybody who knows, and if you don't, the policy statement is about 5 paragraphs. It's kind of boilerplate. They use certain phrases to mean certain things. They change a word here or there. And I think it leaves a lot of people glad, number one, the Fed Chair Jay Powell comes out and explains what they did and why and takes tons of questions from reporters. But at the same time, I think people feel, couldn't you write something longer if you gave us more information about what you're thinking and how it may be something conditional? You don't think you're going to raise interest rates for a long time unless, right? We don't see it now. And maybe that's what they're referring to. And I remember, of course, they've had just almost a year-long policy review, the Fed listening meetings all over the country. And in September, they are widely expected to put their conclusions out. And one of the other things I think we're going to look for in the minutes is anything they said about the inflation target and moving from, we're going to keep it at 2% or try to get it to 2% recently. And then we get there, it's a ceiling, and we stop. That's what people have assumed. And there's a lot of Fed officials saying, no, what we're going to say is 2% is our target. But when we've been way below the target for years, it's okay to go above for a while to get it kind of straightened out. The question is, how far above and how long above? That's the kind of thing. But the Fed can't really change its policy right now, right? Virus is still there. Economy is still weak. There's no reason for them to hint at anything different. But I think these other questions that people are waiting to hear more about are very important.
I just want to say, in terms of market reaction, seems like from our Fed blog that we're doing, our live blog, not much reaction yet in the markets. If I look at the equity markets, they're pretty much where they were prior to the release of the minutes. They are pointing out, though, the long end of the Treasury market, those yields turning a little higher, 30-year yield at a session peak of 1.41%. But let's talk a little bit about the equity trade. Dave Wilson, come on in on that.
Well, you have the S&P 500 near its highs of the day, but you haven't seen a whole lot of movement. 0.3% gain at most, and we're approaching that at this point. But really, the story of the day is Apple poking its head above $2 trillion in market value. First U.S. company ever to do that. Saudi Aramco, when they went public, was just above $2 trillion when the shares started trading. So that's perhaps the next milestone for Apple in terms of their valuation. Apple, at least one big reason why stocks are moving up at this point. And then you can point to Target, which had earnings out that were pretty well received, and those shares up 12%, leading the S&P 500 here.
Yeah, I do want to say the market, though, coming down a little bit on these
just
headlines,
in the last couple of seconds.
Yeah.
I mean, it must be that somebody found something they didn't like, or we're getting close to the highs of the day, and of course you're at record levels for the S&P 500, above where we were yesterday when we broke the February high. So
Yeah.
It's understandable. Perhaps people might want to pull back a bit.
And so, Kathleen, what is top of mind for the Fed right now in this moment? Because, this is a little bit backward looking in terms of, sort of figuring out what they were thinking. We know that this is fast moving economically, medically, all of these things. You're talking to people all the time in and around the Fed. What are they thinking about right now?
Well, they're thinking about the fact that they have done things to support the economy that have helped, support it. There are a lot of businesses that have been able to stay on their feet because the Fed provided lots of liquidity. They've done everything they can to stabilize markets, and every time somebody talks, sometimes whether they're asked or not, they say, and we have done what we can do with monetary policy. As Jay Powell has said, the Fed can lend, but it cannot spend money, right? That goes to Congress. That's where the action has to come next. I think they're probably watching these stalled stimulus talks as much as anything else. They've got to be watching virus numbers. We've got a great chart on the Bloomberg. It's virus hotspots. The top line is the U.S., and those numbers have come way down compared to the peak in July 16th. Less than half of what they were. 78,000 new cases is the total, or was that, or new ones daily, whatever it was, and it's down. It's half. It's in half, and the Fed has said all along, you want to determine what the economy does, watch the virus. Now, there was just a guest on with David Weston from the Attorney General from North Carolina, wasn't it? Yeah. Saying, they sent the kids back to school and now they got to send them home. That's the kind of thing that you get a little momentum going maybe, and then it gets hobbled again.
Yeah. All right, guys, thank you so much. Kathleen Hayes, Bloomberg News Global Economics and Policy Editor, Dave Wilson, Stocks Editor at Bloomberg News. He's going to be along a little bit later on. Jason, there is one thing that I want to mention. The Fed acknowledging to some extent the divergence between the benchmarks and small businesses facing cash crunches. Yeah. So basically saying smaller firms are not well represented in the S&P 500. That disconnect between Main Street and Wall Street. We've talked a lot about that.
And that connection is something that is constantly top of mind for us, as you say. It's also top of mind for a lot of politicians, candidly, balancing sort of economics and policy. And we're all in on politics today, that's for sure, because we are going into the back half now of the Democratic National Convention. We will hear from the vice presidential nominee, Kamala Harris, this evening. We're going to check in with Republican strategist, Bloomberg contributor Rick Davis. He's back with us. Always love to get his opinion about what we've seen so far and what we may see next week as well.
And we've got a historian that's correctly called the presidential elections for the past 4 decades. And then we've got David Thomas, president of Morehouse College. They are seeing so much right now. So looking forward to that conversation. Quick check on the Bloomberg Business Week Bite of the Day. One number that tells us a lot. Today's number, Jason, $100 million.
Tell me.
$100 million. A Long Island lawyer was arrested after scamming lottery winners out of more than $100 million, according to the New York Times. Jason Curlin promising to invest client winnings, but instead put cash into phony investments run by a member of the Genovese crime family, according to prosecutors. Man, this is like I don't know. This belongs in another Netflix series.
Exactly. All right, let's head down to Washington now. Not to the Fed, but to Nancy Lyons. She's got world national headlines. Hey, Nancy.
Jason, Democrats continued their party convention tonight with a focus on Joe Biden's running mate, Kamala Harris. She's expected to make the case for electing Biden and address what she believes are the dangers of President Trump. Bloomberg's Amy Morris reports.
The Biden campaign has a clear idea of who they want to win over by choosing Harris, black voters, younger voters, and women. But what isn't clear is how Harris will engage with voters. Her convention speech tonight will be a chance to reintroduce herself to what will likely be the largest audience she'll reach before November. An ABC Washington Post poll shows only 18% of voters are more likely to vote for Biden because he put Harris on the ticket. 69% say didn't matter. In Washington, I'm Amy Morris, Bloomberg Radio.
Tonight's broadcast will end with the speech from former President Barack Obama. There are still concerns, despite the Postmaster General promising to halt some operational changes until after the November election. Democrats want to know if some of the sorting equipment and collection boxes that have already been removed will be returned. White House Chief of Staff Mark Meadows addressed that question today.
I don't know that even those going back would actually speed up mail processing, so I don't know what the plans are. Postmaster General would have to talk about that. In terms of processing, there's no processing equipment that's been taken out that would actually affect the delivery and the efficiency of that delivery.
Postmaster General Louis DeJoy is scheduled to testify before a Senate committee on Friday, a House committee on Monday. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Nance, thanks so much. You are listening to Bloomberg Business Week. Well, we're going to be talking a lot, as we do just about every day. I had several conversations about it earlier today, just with news sources and whatnot, Carol, about getting back to school. New York City is in this very interesting place right now because statewide and across the city, the test rates, the infection rates look really good, especially relative to other places, other parts of the country, including my home state of Georgia, which remains a mess.
Yeah.
And yet, getting back to school is proving trickier and trickier.
Well, and the teachers are, stepping up and speaking up, and specifically the city's teachers union demanding today that all New York City public school students and staff be tested in the 10 days before the system reopens in September. The president of the United Federation of Teachers Union saying his members still lack confidence that the reopening of the largest U.S. school system can go forward without preventing a new wave of COVID-19. And listen, the other thing is 10 days before, man, a lot, this is what we've been talking about. To me, you want to test, I don't know, the day before, the day of, the morning of, like you have to have, I think, numerous tests to really feel confident ultimately.
You need rapid testing. I mean, that's becoming clearer
true.
and clearer in many ways. And, among the people that I was talking to earlier was a big-time investor who was saying, listen, vaccine is one thing, but that gets complicated. The only thing that gives us the confidence to go back to any sort of gathering or a workplace or a school, realistically, is rapid testing. And maybe it's got to be cheaper, it's got to be made available, and they got to figure this out, especially for schools.
And let's not forget, there are parents that can, yes, easily work from home and continue to stay kind of sequestered, and there are parents who cannot. And that's just the way it is in order to support their families. And so, again, the inequalities, it's just another level that we're dealing with and trying to figure out as we, try to get back to normal and get those schools reopened. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
listening. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
So markets right now are digesting the latest minutes from the last Fed meeting. Officials noted a rebound in consumer spending, but they also repeated the view that the path of the recovery here in the States is going to depend on containment of the virus. Participants saw less improvement in the business sector in recent months, and they also noted the district banks, the separate district Fed banks, continue to report extraordinarily high levels of uncertainty and risk. So we have equities fading right now, with the Dow and the S&P each down by 0.1%. NASDAQ Composite down nearly 0.2%, and obviously the S&P and the NASDAQ coming in from record highs yesterday. We did see shares in Apple trade up by about 1.2% earlier, giving the company a $2 trillion market cap. Apple shares right now off their best levels of the day, better by about 0.6%. Interestingly, the U.S. International Trade Commission has begun an investigation into a patent infringement complaint filed by Maxell. Apple is being accused of infringing on 5 Maxell patents. Now, in terms of stimulus talks, Trump administration believes, or at least sees the possibility, for Republicans and Democrats to agree on a smaller round of pandemic relief, something totaling about $500 billion U.S. Right now, if you look at the dollar, we are sharply higher against the majors, with the Bloomberg Dollar Spot Index up 0.6%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. You are listening to Bloomberg Business Week. Let's talk a little bit about schools reopening, the medical side of that, the social side of it. And it is a complicated issue, Carol, because not everyone has the same access to healthcare. Not everyone has the same sort of job. We have to worry about the most vulnerable among us. And that's exactly what Dr. Ramon Talaj does. He's the founder and chairman of Somos Community here, joining us on the phone from New York City. Dr. Talaj, really nice to have you here with Carol and myself.
Thank you for you to help me with you, please.
So we are talking so much about reopening schools, especially in New York City. It's the world's, or the nation's, largest school system. What needs to happen for it to be safe?
Well, in order for it to be safe, it should be a discussion between all the people, especially the parents of the children, the school teachers, the doctors, obviously the authorities. But at this point, I don't see that happen. We've been trying for that to happen, especially us, the doctor, to talk and be part of the conversation. But we've been the one in the front of the battle from the beginning. Since March, we've been doing this testing, education, and I don't think we're ready to open the school because nothing has changed since March.
What do you mean nothing has changed since March?
Oh, yeah. Well, let me ask you a question. In March, why do we close the school? We close it because the virus killed. There's no vaccine. There's no treatment. Anything of those things have changed? I don't think so.
And so why then do you think people are rushing so much to open schools? Is it an economic question? Is it that, we talk about this all the time, that people, need their kids to go back to school so that they can continue to work. I know this is something you think a lot about. So why is the pressure there?
Well, there's no one answer for when you're dealing with a pandemic that nobody knew about it. Nobody has lived 100 years, and most of our scholars has failed to tell us the truth of this virus. But we in the forefront have been, since March, telling us what's going on. Right now, we know this. 42% in our neighborhoods have tested positive in our test that we do. We in Somos, 2,500 doctors, of those ones, more than 200 are pediatrics and 180 family practices who take care of 200,000 kids, which is almost close to a fourth, the fifth of all the kids in New York City. We've been testing them. 42% in our neighborhood are positive. This is the average between the 4 main boroughs that we are on. Then, if that's true, that means that 58% has not seen the virus yet. If you open the school, and the numbers that the mayor or the governor has given us, 1 to 2%, that means for every 1,000 kids, 20 to 10 will be positive.
Right.
So you're
Therefore,
saying
they
so
will
you're,
join the other one who are negative.
so you're saying you guys have been testing kids in communities, and you represent largely many of certainly the public school systems in New York City. 42% of those kids are positive. I'm guessing a fair amount are asymptomatic, and the concern is that they're going to be in the community and there will be spread.
No, let me tell you, 42% positive in blood test. That means they already had the disease, the IgG.
Okay.
That means that 58% haven't seen the virus. Therefore, those one will be exposed in the school with a 1 or 2% that is estimated, they say is positive now. Therefore, for each 1,000 kids, 10 to 20 going to the school will be positive. Then the other one will get infected. The majority will never have symptoms, but they go back to the houses. Who's going to get infected? The parents and the grandparents. The people who are the most need, they have to find the food day to day. They don't have a steady job. They lost their job. They couldn't buy medication. They have no insurance. We've been hearing very hard.
But you don't think with New York City, we talked about this before we started this interview for our New York audience, you don't think, Dr. Talaj, we talked about the city's positive COVID-19 test rate, to the lowest since the pandemic began in March. I mean, the numbers have come way down. You don't think that's strong enough, good enough, safe enough for kids to go back?
I just give you the example. I'm going to ask you, do you have kids? We just send it, knowing that if you have 1% and the school has 1,000 kids, 10 will be positive. That's 1%, 10. I mean, those 10 will jump around. Kids are kids. In the school with the 580 that in our neighborhood are still negative, and they will get infected. There's no one answer. And then you ask me about what happened if they stay at home. Who's going to take care of them?
Right.
If the mother needs to work, the father needs to work, otherwise they can't survive. They lose their job. If they find a job to do. If they lose their job, they have no insurance. There's no one clear answer. But whichever is the answer, has to be done between all the parts talking together. The teachers, the parents, obviously, the doctors in the community. We are willing to give 500 computers. If they're going to open, we want the nurses in the school. Yes, we need them. And we want them to be attached to the primary care. There is interchange of information according to all the HIPAA compliance, but we could tell them not only the vaccine that could happen at some point, how, who, and when they were infected, how many are infected, and what kind of vaccine they need for other diseases.
Dr.
You're the one in
Talaj?
epidemic within the pandemic.
Dr. Talaj, hold on for a second. We've got to do a little bit of news, but we want to continue this conversation because you certainly are sharing with us a perspective that I think maybe hasn't been heard as much, especially as we get ready to open up those schools in New York City. So we're going to continue. Dr. Ramon Talaj, founder and chairman of Somos Community Care, joining us on the phone in New York. We'll get back to that conversation in just a moment. This is a heated one, a confusing one, a conflicted one, Jason. You and I talk about it all the time. This
We'll continue to.
is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You're listening to Bloomberg Business Week. Carol Master along with Jason Kelly. And listen, this is an issue, Jason, you and I have been talking about a lot over the last month about how do you reopen schools safely. And we've seen a lot of stories about how it's not so easily done. And we're going to get back to Dr. Ramon Talaj over at Somos Community Care because he's really concerned about what's going on in New York City and the plans.
It's a great perspective, and really lucky to have him here, and glad he's sticking around to tell us a little bit more about what he's seeing. In the meantime, let's get back to the market, get an update there from Doug Krisner. Hey, Doug.
Hey, Jason. Right now we're seeing price action move to the downside. Markets are digesting the minutes from the last Fed meeting. The tone is clearly dovish since policymakers downgraded their expectations for growth in the second half of the year. Also an indication that more accommodation may be needed. They did see a rebound in consumer spending, but they also repeated the view that the path of the recovery is going to depend on containment of the virus. Right now, the Dow is struggling to hold on to a slim gain of less than 0.1%. The S&P 500, NASDAQ comp, each down from record highs, with the S&P weaker by 0.1%, NASDAQ composite down about 0.3%. Now, in terms of the coronavirus, Greece and Ireland moved to tighten rules after a jump in cases. The UK is testing or possibly testing people at airports, and Finland reinstated border controls. Here in the States, New York City's positive test rate now at the lowest level since the pandemic began. Florida also showing signs that the outbreak is easing. Lauren Sauer is Assistant Professor of Emergency Medicine at the Johns Hopkins School of Public Health. She says the goal is to get K through 12 schools open as quickly as possible, however, taking the right precautions. Meantime, colleges and universities can adapt.
But they also are locations, as we've seen in the past few days, that have the potential to create explosive outbreaks. Teenagers, young adults, they're going to make choices that may exacerbate outbreaks, and oftentimes it's predictable and expected behavior, and we have an obligation to reduce the risk in those spaces.
That is Lauren Sauer, Assistant Professor of Emergency Medicine at the Johns Hopkins School of Public Health. The school is supported by Michael R. Bloomberg. He is the founder of Bloomberg LP and Bloomberg Philanthropies. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. Well, as you just heard Doug mention, we're talking to experts all the time about this, talking about schools reopening. Let's continue our conversation with Dr. Ramon Talaj, founder, chairman of Somos Community Care, joining us on the phone from New York City. And as he shared with us a few minutes ago, it's an independent physician network of more than 2,500 healthcare providers, and they have a window into the population that could be most affected, would be most affected when and if schools do reopen. So, Dr. Talaj, what does a good plan look like? What do we need to do at this point? Do we just need to wait for a vaccine?
There's no question there is no one answer for that. I agree totally with the Teachers Association. We had to wait. We had to implement something that we all call a solution. I know it's going to be painful, but if we open right now, the way it is, it's not different from March. Still, people are positive out there, and they will come to the school, and the kid hasn't seen the virus, will get infected, and they will bring it home. And elderly and parents are going to die. They're going to be very sick, and we don't want to see the same way happen before in New York City. We don't.
So I do want.
And if they open.
Right.
I don't want to see one of my kids going to public hospital to get tested. That's preposterous. They should be tested by the pediatricians or in the school.
Well, so
area that not affected.
Is that how? I mean, a vaccine is not around the corner. We may not even get something before the end of the year, and some say maybe it'll be a year from now before we really have something that's very successful in terms of the immunity it creates in individuals. But I do wonder, Dr. Talaj, in the meantime, there is pressure to get kids back to school because there are those who, as you know, can hire private tutors or, learn from home successfully, and so we are worried about who gets left behind as a result of this. If we could have rapid testing in schools and administered by medical professional, would that make it safer significantly? Would your opinion change about the safetiness of, or the safety of having kids back at school?
Let me ask you a question. Are you talking about to do 1.1 million tests every 3 days?
I guess that's not realistic. Certainly not today.
Let's start that way. We are physicians. We believe in science. Besides, I'm very trusting in God. I'm Christian and Catholic. But I'm telling you right now, it got to be some kind of business if they want to open the school the way we're talking about. Nothing has changed since March. And we've been in the forefront. And we were the first one who gave the alert at the beginning of March. At the end of March, when we told them 70% of the people in Queens are positive. Stop. We need to do isolation. They were looking for ventilators. We know what we're saying. We don't have the answer yet. There's no science answer about this virus. Certainly, we know that the vaccine that I produce, they want to produce it because they want to create antibody in the kids. Now we know that 42% of our kids has antibody. That's an average for our neighborhood. Therefore, 58% is the most important number. Those are negative. They haven't seen the virus. Those will get infected, and he will go again. He will go again, and most of the time, children does not have symptoms.
Right. So then do we just need to wait for herd immunity then?
Well, I just tell you what the facts are. Now, we sit down together, and the teachers, the parents, the stakeholders decide this is the way we go. Things could go wrong, could go right. It will be casualties. That's probably what's going to happen. This is really, we're dealing here with this, we call it a solitude virus, because people are dying alone. They cannot even see their family. I don't want to see another round the same way we saw it a few months ago when so many people died in our neighborhood. Those are the same ones who have no computers. Their fathers have no computers at home to take the kids. They don't know they have Wi-Fi. All of these things you have to put in consideration. But there's no one answer. One thing is an answer. This virus still kills the same. There's no vaccine. There's no treatment.
So bottom line, you would say no schools open come September in New York City. Just quickly. Okay. Just got about 30 seconds.
And if they do, we will be exposed to catastrophe.
All right. Well, we're going to leave it there. Thank you so much. We look forward to keeping in touch with you. Dr. Ramon Talaj, founder, chairman of Somos Community Care. It is a network of independent physicians, more than 2,500 healthcare providers involved, serving predominantly Latino and immigrant communities. And really important work, but also a very strong opinion about where we are when it comes to reopening schools.
And a reminder, Jason, and we saw this, that certain communities in New York City got impacted by the virus. I talked with a doctor up at Columbia Presbyterian, way uptown, and said, their hospital was overwhelmed, and a lot of it had to do with their surrounding community. So I understand where Dr. Talaj is coming from. And as we said, a very confusing and conflicted subject when it comes to reopening schools. All right, let's get into world and national news headlines. For that, let's turn things over to Nancy Lyons. She's in our 99.1 newsroom in the nation's capital. Hi, Nancy.
Hey, Carol. Kamala Harris, the California senator turned vice presidential candidate, will introduce herself to American voters tonight in her first primetime speech since joining the Democratic ticket. Ohio Congresswoman Joyce Beatty tells Bloomberg Harris is a formidable candidate.
I can tell you that she is strong, she is smart, she's strategic. And if I were Vice President Pence, I would not want to be debating her.
Tonight's theme is a more perfect union. It will focus on the people who Joe Biden says will help him succeed if elected. Former President Barack Obama will be wrapping up the evening with a speech in support. Democratic and Republican leaders are still looking for some common ground on the next round of pandemic relief. White House Chief of Staff Mark Meadows says he's been continuing discussions behind the scenes.
I do know I've had a number of conversations with Democrats over the last couple of weeks. Those private conversations have gone extremely well, and so if that's indicative of what Speaker Pelosi might bring to the floor, I'm encouraged.
House Speaker Nancy Pelosi has suggested Democrats might be willing to cut more from their proposal to reach agreement on immediate needs and then return for more aid after the election. Pharmacists in all 50 states will be authorized to give childhood vaccinations this fall under a new federal directive. Alex Azar, the head of the U.S. Department of Health and Human Services, made the decision as part of the emergency powers he has during the U.S. coronavirus pandemic. It effectively temporarily preempts pharmacy restrictions in 22 states. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week. Well, one of the big headlines this morning, Carol, J&J, Johnson & Johnson, doing a deal, $6.5 billion in cash to acquire Momenta Pharmaceuticals. That, of course, is a maker of autoimmune disease drugs. Deals continuing to happen even sort of on the edges of the big medical issue that we're all facing, that we're all talking about all the time, which, of course, is the pandemic.
This kind of checks out, especially if you see and remember what a lot of the big pharma executives said during the most recent earnings season, and that is that they believe the most serious effects of the pandemic have passed. And so now what you're seeing is those big drug companies think about, okay, what's our future? Where do we need to be investing? And so we saw earlier this week, French drug maker Sanofi, they bought the U.S. biotech company Principia Biopharma. That was a $3.4 billion deal. And so you've got this deal today, J&J paying $6.5 billion to buy Momenta Pharmaceuticals, and they make autoimmune disease drugs. But, you know, we're seeing a lot of movement, again, within the pharma space. And again, Jason, it has to be like, okay, I got to have drugs in the pipeline. I got to think about it because this is my future revenue stream.
Well, and I think that's a really interesting thing to remember, that this pandemic has been incredibly disruptive to the broad medical community, not the least of which is pharmaceuticals, because people aren't going to the doctor, they're not getting elective surgery, and so the consumption, the development, R&D, everything's been sort of turned upside down, and so these companies, to your point, have to be thinking longer term, looking past the virus to some extent, to make sure that they have functioning, profitable businesses.
Yeah, totally. I think that point that you just said, and there's a great line in our story that's on the Bloomberg that just talks about that decline in elective procedures, medical procedures, and then folks who weren't going in for their cancer treatments. Like, these have been big profit engines for the big drug makers, and so that's not happening. And so they're looking and thinking about, okay, what do we need to do to kind of get us ready for the future? Interesting story and a reminder, the virus and its widespreading effect.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
So we've got about, an hour and 13 minutes today in trading for equities. Right now we have the S&P 500, NASDAQ Composite, each down from record highs, not by much, probably around 0.1%. Markets really are in the process of digesting the minutes from the last Fed meeting. The tone was clearly dovish. Policymakers have downgraded their outlook for second half growth, and there's also the indication that more accommodation may be required. Officials did note that there was a rebound in consumer spending, but they also repeated their view that the path on the recovery is going to be very dependent on containment of the virus. The Dow is up just 0.1%, and as I mentioned, broader and secondary market measures moving lower. Apple is holding on to a gain right now. The stock had been up more than 1.2% earlier in the day, and that was enough to give Apple a market capitalization of $2 trillion. We are a bit below that now. The gain in Apple is 0.7%. Also, Target today moving higher. The company reported sales well above estimates. That seemed to kind of brush off concerns. Demand would ebb after consumers spent their relief checks. We are seeing weakness, though, in shares of TJX companies. Some disappointing results on that front has the stock moving lower. Viacom CBS is reportedly in talks to sell the tech news and review site CNET to the digital media holding company Red Ventures. This is according to Dow Jones. We're looking at a spike in the dollar, strengthening for the first time in 6 sessions, with the Bloomberg Dollar Spot Index rising 0.5%. Flip side gives us a weaker yen and a weaker euro. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right. Much appreciated, Doug. Doug Krisner there with the Bloomberg Business News Flash. All right. You are listening to Bloomberg Business Week. Carol Massar along with Jason Kelly. And check out this Bloomberg Business Week story, because let's not forget, despite everything going on, hackers never let up. This story at Business Week about how hackers bled 118 bitcoins out of COVID researchers in the United States. So yeah, there is a virus angle here. Kartikeya Mehrotra is cybersecurity reporter at Bloomberg News. Joins us on the phone from San Francisco. Kartikeya, interesting story. Tell us what's going on.
So in early June, cyber attackers from a cyber gang broke into the Department of Epidemiology and Biostatistics at the University of California, San Francisco. UCSF is famous for its med school and its teaching hospital, and was in the midst of some COVID-related research. They were looking into, at the time, we were still wondering whether hydroxychloroquine could offer any redeeming value as treatment. They were looking into contact tracing programs. They wanted to know who was adversely affected most by COVID. And in that first week of June, hackers locked up 7 of their servers and demanded $3 million in ransom. It took about a week. UCSF hired a negotiator and some lawyers to help them see their way through this. And over the course of a week, we got a glimpse into what it takes to get out of this very, very messy situation.
Yeah, so you saw basically the communication between the operator and UCSF. Tell us what was in there, because the back and forth is fascinating.
It's really strange. So you've got one side that is, objectively a criminal, right? And in a real-world situation, there's no way you offer legitimacy to their business model, which is holding you hostage. But in a cyber realm, there's no chance of, or very little chance of, at least immediately catching these bad guys. So you have to take them seriously, and that's what this negotiator did, was provide them with the respect they needed. They demanded respect. And so the negotiator had to provide them with that sort of certainty that we are taking you seriously. We know that this is your business model, and you're just here to do your job. And so UCSF really had to sort of buy into that. And so the back and forth over weeks was at times comical, almost like amateur drama-ish.
Kartikeya, I want to do a reading around the table with the lines back and forth here, because you say the guys at UCSF were saying to the hackers, we've poured almost all our funds into COVID-19 research to help cure this disease. That on top of all the cuts due to classes being canceled has put a serious strain on the whole school. They're like, we don't have the money, basically. And then the operator was like, wait a minute, the school, you collect more than $7 billion in revenue each year. You got lawyers, you got security consultants. Yeah, we think you should be good for a few mil.
Yeah, they just weren't buying it, right? They saw this as a massive institution that spends billions every year, and they should have a couple mil to toss around to get their system back online. Unfortunately, or UCSF's contention was that, look, we're in the middle of a pandemic. We don't know if our students are coming back and if anybody's going to be paying their bills to us this fall. We're trying to research a cure for this disease. We just don't have that kind of cash laying around. So their initial offer was $390,000, and the operator scoffed at it. He or she just didn't see it as a reasonable offer because they obviously have a job to do as well. And like any salesperson, they have a boss as well. And they were afraid of taking $390 to their boss in the first place. They said, look, you have to do better than that.
Well, and down lower in this story, and I encourage everybody to read this because it does take some twists and turns, and you're reminded that as cinematic as this is, and I couldn't help thinking if they made The Big Lebowski now, it would have to involve some Bitcoin. But, you do have some really interesting moments where the representative from UCSF basically is like, look, man, like, as you say, like, my job's on the line here. People are essentially making fun of me. They think I totally messed this up, and you have the operator coming back and be like, it's really not your fault. We could do this to anyone. I mean, it's chilling in a lot of ways.
And it's really true. And so the most important aspect of that is it's important to understand, I guess, that this is a negotiation tactic as much as it is a reflection of what's going on at UCSF.
Yeah.
So it is entirely possible that this individual was being blamed for the hack. And, victims of ransomware attacks typically don't want to talk about this in public because being victimized can be, there's a notion that it's embarrassing, right? But here, the negotiator presented that, look, I am being held at fault here, and there's no way out of this unless you help me get through this. So will you please, help find a solution, one that's reasonable? And that, I think, really sort of appealed to the operator because they saw, look, this is a person who's taking us seriously, who's willing to work with us. I will make money off of this one way or another, and it did help.
I told you it needs a table reading, right?
Yeah,
like Jason,
absolutely.
you play the hacker. I'll play one of the negotiators.
Yeah.
Cardigan, you can be the narrator.
Yeah, you can direct us all.
You'll be the clock. Yeah, totally. You could be the clock. Like, I could see it as like a kind of a one-act play. I mean, it's just, this is our times, right? I mean, this is the kind of stuff that we are, despite to some extent we have better controls, we still have to deal with stuff like this. Just got about 40 seconds here.
It's absolutely true, and what the operator was saying was, in fact, the truth. This could happen to anyone, and it wasn't the fault of UCSF. They were a victim, right? And the university had to do what it could to get out of it. But it's important to understand that if you are attacked, talking about it and explaining what happened to you will help others defend against similar attacks in the future.
Yeah, well, props to them for sharing this story with you, and props to you for telling it so well. We really appreciate you joining us. Check it out on the Bloomberg and Bloomberg.com. Kartikeya Mehrotra is cybersecurity reporter for Bloomberg News. He joined us on the phone from San Francisco. UCSF hack shows evolving risks of ransomware in the COVID era. Carol?
We're living in strange times. I'm going to put it out on Twitter, everybody, because you're really going to want to read it and just hear that back and forth a little bit more specifically. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week continues. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next. Coming up next, though, on Business Week, we're going to dig a little bit deeper into those Fed minutes. We'll get into that with our own Yelena Shalejeva. This is Bloomberg Business Week. Carol Masser, Jason Kelly, and this is some groovy music. And this is Bloomberg.
From Bloomberg World Headquarters in New York, I'm Doug Krisner, 3 p.m. on Wall Street. The equity market has been fluctuating for the last hour since the minutes from the last Fed meeting were released. The tone, very dovish, and policymakers now downgrading their outlook for the second half of the year. At the same time, there was an indication that more accommodation may be needed. Fed officials did note a rebound in consumer spending, but they repeated the view that the path of the recovery in the American economy is really going to depend on containment of the virus. The minutes also show Fed members are fairly skeptical about the benefits of adopting yield targeting strategy, and the minutes were a little silent on the prospect of changing the size or composition of the Fed's purchases of U.S. Treasuries. Right now, the Dow holding on to a gain of about 0.2%. NASDAQ comp, though, down from a record high by about 0.1%. The S&P 500 holding on to a very narrow gain, but I'm going to call it flat nonetheless. Shares in Apple right now higher, but off the best level of the day. Stock is up about 0.6%. Earlier, Apple shares were more than 1% higher, and that gave Apple a market cap of $2 trillion. We're a bit below that level now. Shares in Target holding to the positive side. Company reported sales well above estimates. Lowe's at the same time reported strong summer sales. However, TJX companies with disappointing results, those shares a bit on the back foot. Dow Jones reporting that trade negotiators from the U.S. and China are planning a video meeting in the coming days. Meantime, the U.S. is suspending or terminating 3 agreements with the government of Hong Kong linked to extradition and payments derived from shipping. We've got the dollar stronger, snapping 5 straight days of weakness. Right now, the Bloomberg Dollar Spot Index is pushing up by about 0.5%. Are seeing a weaker yen here at 105.93, a weaker euro at $1.1856, and the offshore Chinese yuan now weaker at 6.9205 against the dollar. 10-year Treasury yielding 67 basis points. You're caught up on markets. I'm Doug Krisner. That's the Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, let's do a little Business Week economics now. We had those Fed minutes cross the wire right at the top of the show, Carol, and while they are backward-looking, they do give us a little bit more insights beyond the Sphinx himself, Jay Powell, sort of sharing his thoughts there at the podium on the day of the Fed meeting. And we also want to sort of synthesize it with everything we're seeing right now in this economy, an economy that the market continues to defy in many ways. So let's get into it with Yelena Shalecheva. She is senior U.S. economist for Bloomberg Economics, joining us here. Are you in our studio, Yelena? Are you home?
I'm at home in Long Island today.
Okay, there you are.
I will be heading towards the office probably on Friday.
Oh, okay.
We'll see you there.
There you go. Well, you won't see us there, but we'll talk to you from a distance, and we'll be happy to do so. So tell us what you made of the minutes, what you and your team saw as you sort of broke that down, reading between the lines and reading the lines themselves.
I mean, in terms of economic outlook, I think it's still kind of the same. A lot of uncertainty prevailing over the economic outlook, and the Fed did not really take much comfort in the recent improvement in the labor market. They look at payroll gains in May and June, and of course we now know the July one, and say, well, you know, those gains have slowed. But I think what was most interesting to me is anything that was related to the framework policy review, and as a result, what the Fed is gearing up to in terms of introducing new forward guidance. I think they really want to take time and release everything, the framework review, the guidance, and any resulting changes to their policy tools as one package. And perhaps they will have to push it back until the end of the year, the beginning of next year, just simply because they want to take time and review it once again and just make sure they do it all at once.
So wait. Yelena, all right, let's assume I've been living under a rock for a while. Explain to me the significance, though, of this guidance thing. Was this something new that they were considering doing? I mean, tell me, it feels like it's nuanced. So just help us out here.
So basically, the Fed has been using inflation targeting recently. So they say, okay, we're aiming for 2% inflation over the medium term. And they have failed to achieve this 2% target in the last expansion for 90% of the time.
Right.
So right now they're trying to enhance it and kind of try to see if they can change the whole framework around it by incorporating the past into their guidance. So let's say, okay, they say, we failed to achieve 2% target over the last year. Why don't we tolerate higher inflation for the next year and keep rates low and do, keep policy accommodative for much longer until we receive some higher readings on inflation, perhaps even exceeding the 2%. So on average, inflation is running at around 2%. So there has been a lot of discussion around introducing these changes. The Fed has conducted multiple discussions with different economic agents and consumers and everybody. And they are getting ready to release the results of this review and getting ready to introduce new guidance into the statements. We just think they might take some more time and not release it at the September meeting yet.
Okay.
So what's the most important thing that needs to happen with the economy next? Is it fiscal at this point? I mean, are you guys talking a lot about what even a sort of skinny deal, as they say in Washington, might look like? What do we need to ensure that this stays at least on whatever track it stays on?
Is that like skinny vodka? What is that, Jason?
You know what I'm talking about.
Well, I think you're absolutely right by calling it this way, and I think any help is necessary. What needs to happen, what really needs to happen, is that we need to resolve that healthcare crisis. That's what needs to happen. This will, the businesses will get reassurance, things are on track, and they will start hiring workers, and everything will be fine. But until then, any fiscal help, and that was very prominent in the minutes, any fiscal help would be absolutely beneficial and necessary to keep us, chugging along and to provide that bridge over the health crisis until we get into that happy new world without the virus.
Well, we're all looking forward to that world, that's for sure. And in the meantime, a lot of big decisions have to be made. We've got a presidential election. We're going to be talking a lot more about that as the show goes on. Yelena Shalecheva, thank you so much. Good to hear your voice out in Long Island, senior U.S. economist for Bloomberg Economics, Carol. And so much of that, we're reminded when we see something like the Fed minutes and hear the analysis of it, that this is an economic crisis, it's a medical crisis, it's a political crisis, it's a social crisis, it's a cultural crisis, it's an inequality crisis, it's all of it.
It kind of checks so many boxes, right? And the longer it goes on, we talk about it hasn't been a financial crisis, but I do wonder that if more people can't pay rent or you have more businesses going down and they have to default on either, their rent payments, you do wonder what happens to kind of that side of the ledger and what it means for banks, who have been loaning out, money to various businesses. And if you find a lot of companies going bankrupt and defaulting, I don't know, it just gets tougher and tougher.
I saw a tweet go by from somebody in Brooklyn. And this is just totally anecdotal. He says, I just saw a list of permanent restaurant and shop closures in my Brooklyn neighborhood due to the pandemic. 88 businesses. And he says, that's a massacre. It's true. Permanent closures. Even the idea, this happened, I think...
And that's happening in city after city after city.
The idea that there are a bunch of Gap stores closing in San Francisco. Those sort of anecdotal things just keep catching me in many ways. That's the home of Gap. The flagship Gap in San Francisco is closing.
But don't you think about how many things you have not bought because you haven't been passing stores like on your way home?
All I buy is T-shirts online.
And you know what? I know that's all he's been buying. All right, let's get back to world and national news headlines. Back on over to Nancy Lyons in D.C. Hi, Nance.
Hey, Carol, it is looking like Democrats and Republicans could be closing in on what they call a skinny deal on pandemic relief. Bloomberg's chief Washington correspondent Kevin Cirilli explains what is happening regarding the stimulus plan.
Speaker of the House, Nancy Pelosi, suggesting that she would be able to get on board for something significantly less than the $3 trillion stimulus that they had wanted to go for, provided that they come back in the lame duck or in January to pass additional fiscal stimulus. That, of course, is something that is weighing heavily on the eyes of all local, state governments, and, of course, Wall Street investors as well.
Well, Americans do not seem ready to send their kids back to schools. A new Washington Post poll finds 62% expressed strong opposition to schools reopening, only 19% in favor. Black Americans were the most likely to oppose reopening schools, with 70% against, compared with 57% of whites opposed. There's also a political divide, with 74% of Democrats opposed to in-person instruction, compared with 35% of Republicans against the idea. The European Union says it will not recognize the results of the recent election in Belarus, and it is demanding a full investigation. EU Council President Charles Michel says the people of Belarus deserve better.
The EU will impose shortly sanctions on a substantial number of individuals responsible for violence, repression, and election fraud.
The streets of Belarus have been filled with protesters. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. Well, we've talked about kids going back to school. We talked about colleges going back to school.
Yes.
We heard about Notre Dame earlier this week, yesterday. We heard about UNC Chapel Hill. So colleges are basically saying, we're not so sure if it's safe for kids to come back to campus. Meanwhile, apparently it is safe to play college football in some places.
Because we're outside, yeah, no problem.
It's unbelievable. I have to say, I was just emailing with
Note the sarcasm.
So my dad went to Georgia Tech, and proud Yellow Jacket alum, has gone to a lot of football games over the years. He just forwarded an email to me and my brothers about Georgia Tech, and they're saying we're going to have football games, 20% capacity in the stadiums. I have to say, what? Like, what?
Yeah.
I
well,
don't
especially
get it.
if you look at the professional leagues and teams and the troubles they are having, and you're talking about football, mega contact sports, you're close in with one another, you know, you're getting a workout, you're running around. I mean, they're talking about too, and then you're talking about stadiums.
That's the thing.
They're going to allow fans to the stadiums.
Yes,
you
that's
know,
the 20% I'm talking about.
Yeah, I mean, limiting capacity. But I still think all of it is crazy, Jason. I don't know how you do it safely.
Yeah, I mean, it's interesting to your point about, you know, if you've been watching the NBA, as I have, it is actually pretty remarkable what they've pulled off. 0 positive tests inside the bubble. You know, they have had people that they've sort of had to keep out. They've had to quarantine people who have broken the rules, but 0 positive tests there, 0 positive tests in the NHL. Major League Baseball has been a different notion.
Right.
We don't know what's going to happen with pro football, but pro football, like college football, is saying, yeah, we're going to have some fans back. I don't see it. I just don't see it.
Yeah, I don't know. I think
even at 20%.
You know, this whole thing. My husband and I have this constant conversation. It's like, do you trust the people you're going to be with? Do you trust that they've been quarantining and being safe? And then you're talking about putting tons of people in a big space, and yes, it may be open air, but still, do you trust what they've been doing? You know what I mean? And so I think it's really difficult. So, yeah, we're going to see more of these stories as we continue and get closer to September. This is Bloomberg.
1130.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
It is indeed, with less than 43 minutes to go in today's equity trading session. Market is churning right now, given the minutes from the last Fed meeting. Want to get you caught up on price action. Let's get to the macro squawk desk and Bill Maloney. Hey, Bill.
Hey, Doug, and thanks. U.S. stocks are quiet right now. Dow's currently up 37 points. S&Ps are down 2. NASDAQ declines by 18. The U.S. 10-year yield at 0.68%. WTI crude futures are a little changed. Gold is down 66, and transports gain 52 points. Leaders to the upside in the Dow, Nike and Goldman Sachs, while Coca-Cola and Walmart led to the downside. After earnings, Target rose 13% to a record. Lowe's was little changed. And like you said, after the Fed minutes, they made some comments. The Fed's forecast a less robust recovery in the second half. And Apple hit the $2 trillion in market cap level. Wrapping things up, NVIDIA reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Doug?
All right, and to hear live breaking news right on the Bloomberg terminal, the function is SQUAWK and then the green go key. Seeing some dollar strength right now with the Bloomberg Dollar Spot Index rising about 0.5%. That gives us a weaker yen, weaker euro, and a weaker offshore Chinese yuan. I'm Doug Krisner. That is your Bloomberg Business Flash.
All right, Doug, thank you so much. You are listening to Bloomberg Business Week. Well, for this edition of Bloomberg Green, we turn to one of our faves, Noah Buhire, finance reporter for Bloomberg, joining us on the phone from Seattle. And he's looking south in this case toward California, where we know those wildfires are raging. If it's not one thing, it's another there in California. Climate, obviously, a huge piece of this fire risk, but there's a guy who's got a cure of sorts. Noah, this is a phenomenal story. We always love talking to you.
Everybody has a guy.
Yeah, he's got a guy. I mean, this is really something. Tell us about what's going on here.
Yeah, so this feature I reported is about a guy named Jim Mosley. He started a company several years back. The name is Sunfire Defense, and basically he's selling a variety of wildfire protection gear that homeowners can use to help harden their homes, and when a wildfire comes through, hopefully will help save the structure. The problem is that one of his main products, called SPF 3000, has drawn the attention of some attorneys in Santa Barbara and the LA city attorney, and they're basically alleging that he's made false or misleading claims about this product, namely that it's not nearly as effective as he says it is, and that it's toxic, even after he said that it was not harmful to humans or animals and that kind of stuff.
So tell us, you actually, I believe, witnessed it firsthand?
Yeah, so in February, actually, before the pandemic shut everything down, I spent a day with him in Los Angeles and got a demonstration of the product. And it's pretty compelling. He takes a stick that he says was treated with this substance and takes a blowtorch to it. And, the part of the stick that hasn't been treated gets very brittle and breaks, and the part that is gets a nice char on it, but then he'll take a key out of his pocket or a coin and scratch that off, and you see the wood beneath.
Can I just mention the cost of this? You put in your story $3.50 per square foot, which means it costs tens of thousands of dollars to cover a large home using SPF 3000. This isn't cheap. Now, mind you, if you're saving a multi-million-dollar home, it's pretty inexpensive, I guess. But it's not.
Yeah, look, that's the value proposition, and Mosley, has an interesting client list as a result. He has treated parts of the Neverland Ranch. He treated the home of Star Wars actor Mark Hamill in Malibu, Dean Koontz, the best-selling novelist. He's managed to attract the attention of some well-known folks.
And
I mean, how much of this, sort of taking a step back, Noah, is about the fact that, especially, I mean, as we see these headlines, it's just unbelievable to be reminded of this wildfire risk. And I was reading and listening to a story recently by a friend of mine out at KQED in California, talking about the enormous risk of wildfires, especially to those most vulnerable in assisted living homes and nursing homes. You should check that out as an aside. But I mean, people will sort of do whatever they can in many ways. He's taking advantage of people, one could argue, who are desperate for any solution here.
Well, yeah, I mean, that's essentially what the district attorney in Santa Barbara and the city attorney in LA are arguing, is that this is a predatory company, that he's preying on people's insecurities and fears, and the very well established fact that wildfire risk is high in a lot of parts of California, and climate change is making it worse. I mean, that's ultimately why I wanted to do this story. Moseley is not alone. There are lots of people and lots of companies peddling fixes to this problem. But the fact of the matter is that development patterns in a changing climate have created a situation where you've got, hundreds of billions of dollars of real estate at risk in this state. And, people who live there are at a point that they're willing to just put their hope and their faith in unproven or, not very well tested solutions to the problem. And, one of the things we tried to highlight, this is really a story of our moment right now. We're going through a lot right now with the coronavirus, and there are parallels there. People are searching for cures to that disease, and in the absence of a solution and a vaccine, people are just grasping for whatever they can.
No, it's a really good point. I'm glad you made that parallel, because it did certainly occur to me as I was reading your piece. Noah Buhire, thank you so much, finance reporter for Bloomberg. He joined us on the phone from Seattle. Check out his story. In wildfire-ravaged California, a salesman is peddling a cure. Read that story and more on climate news, science, and the environment at Bloomberg.com/green.
And I'm just going to say, there's a little Elle Macpherson in that story. You heard Noah talk about Neverland Ranch. So there's a lot of interesting little nuggets. And certainly you get a feel of who this Jim Moseley is. So fascinating story.
I've been to Neverland Ranch.
Of course, I know, because of Tom Barrack.
Tom Barrack, Colony Capital, owns it. I know. It is a remarkable place. Still for sale, by the way, if you want to pick it up.
I can only imagine. Okay, I'll put it on my list to get to it. All right, you're listening to Bloomberg Business Week right here on Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, coming up, we're going to hear the song of the day, which leads into the chart of the day. We just know, all we think we know is it won't be Stairway to Heaven.
I was multitasking, okay? There's the answer.
And I saw you taking a phone call.
All right, we're going to get to the chart of the day.
Were you
in
calling
just a
someone
moment.
to see what the song of the day was?
No, I got Google. for
Phoning a
that.
friend?
Phoning a friend. Exactly. I like that. All right, let's get back to Doug Krisner with a check on the world of
I
business. Hey, Doug.
cannot believe you missed Stairway to Heaven.
I
All
did
the songs
no,
on the planet,
I
Carol.
did not. I got it. It was Alex.
Oh, yeah. Blame it on the other person.
Krisner, I thought you were my buddy.
I am. All right, let's move on. You know, we've been really in the process of digesting the minutes from the last Fed meeting. The overall tone was dovish. Policymakers downgraded their expectations for growth in the second half of the year. There's also the indication here that more accommodation may be required. It was noted that there was a meaningful recovery in consumer spending, but Fed officials repeated their view that the path of the recovery essentially is going to depend on containing the virus. And a few members seem fairly skeptical about the benefit-cost trade-off when it comes to adopting yield targeting strategy. So we have a weaker Dow and the S&P down from a record high. S&P weaker by about 0.2%. NASDAQ comp coming in by about 0.3. Apple shares higher, but off their best levels of the day. Earlier, stock was up more than 1%, and that was enough to give Apple a market cap of $2 trillion. It's time now for the Bloomberg Small Business Report. Let's hand it to John Tucker.
Well, the Knack factory in Portland, Maine is a Paycheck Protection Program success story. Back in April, this video production firm was seeing clients cancel contracts, and the co-owner, Alex Steed, was awaiting word on government aid. And we circle back this morning to see how things are going. Alex, tell us your story.
We got this PPP loan money. We're able to retain or bring our employees back. And fortunately, it looks like we're going to be able to have that full loan forgiven.
And how much is that?
$72,000.
And that's enough to sustain you for a while as you continue to sort of pivot the business?
Well, it was enough to keep our payroll going to bring in a good deal of new business, fortunately. And so I think for the first time in a long time, even before this, we have enough business booked for enough months out to continue growing, which is really good and unexpected news.
For a creative agency that does a lot of video production, where's the business coming from?
A lot of our business comes from organizations and clients that are trying to reach audiences. Because of COVID, audiences are out of reach, or people might have had an event and they can't have an event anymore, so they'll make a video in its place. And people are just trying to figure out how to stay in touch with their customers and clients. COVID makes it hard, and video makes it easy to get in touch with them.
All right, Alex Steed, co-owner of the video production firm Knack Factory based in Maine. I'm John Tucker. That is your Bloomberg Small Business Report for today.
All right, and she's buying a stairway to heaven. Just kidding here. We're looking at a stronger dollar right now with the Bloomberg Dollar Spot Index higher by 0.5%. That was a little out of sequence. I would have capped the report by saying, and she's buying a stairway to heaven. That's your business flash. Carol, Jason?
I'm
All
back
right,
at 7:31. You just better watch your back there, Krisner.
Watch yourself. Watch yourself. You know how she can be, Doug. You know it. All right. You're listening to Bloomberg.
Okay, a little love from Linda Ronstadt, right?
Yeah, what?
Oh, you're thinking of the deodorant commercial,
Yes,
right?
all I can think about is the deodorant commercial. Sorry, Linda Ronstadt, but yeah, what
My
was
husband
was
and
it
I were just
for-
talking about her. I don't know.
You were just talking about deodorant, or you were just talking about Linda Ronstadt?
No, we were just talking about Linda Ronstadt. We were playing a bunch for Ags, and we were just listening to a bunch of Ronstadt old.
All right, get closer. Is that what this is
What
about?
was the
Dave
deodorant?
Wilson?
Okay, now I've got
No,
it.
it wasn't deodorant. It was toothpaste.
Oh, there you
Close-up
go.
toothpaste.
Close
Love,
up.
love, get close up.
There you get close up. Nicely done, Dave.
Anyway, getting closer, in a sense, is what Apple is doing. We know the story today about the company going above $2 trillion in market value, becoming the first U.S. company ever to do that. But there's a comparison that's sort of made the rounds a little bit that's highlighted in today's chart between the market value of Apple and the market value of all the companies in the Russell 2000 index. You know, they're smaller companies. Nonetheless, there are close to 2,000 of them as we speak. So what's happened is, if you look back to the beginning of this year, the gap between the two was roughly $1 trillion, a little bit more than that. Now, you're seeing gaps as small as $256 billion. That's what we had earlier this month. It's a shrinkage of about 78%. And at the rate things are going, you know, in a few months, we may well be talking about one company having more market value than an entire index, which just is another way of sort of showing how unusual what's happened in Apple really is from a market perspective. You know, I saw a chart like this last week because it was put out by Bespoke Investment Group, and that got my attention. So now it's the chart today. Given that Apple has reached its 2 trillion milestone, it's particularly timely. And actually, Jim Bianco over at Bianco Research put up a similar chart on his Twitter feed today. So this one is definitely making the rounds, folks. And if you haven't seen it already, send me an email. I'll get it to you along with the explanation that goes with it and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
I feel like everybody's ganging up on me. Even Twitter is like, hey, Carol, are you ready at Shazam? Like, you got your fingers ready? You're like, come on. I know some of this stuff.
Well, I mean, listen.
I know. I deserve it.
I mean, you...
I did get Stairway to Heaven, though. Come on.
You absolutely did.
Thank you, David Wilson.
I will verify that.
My buddy
All right.
Dave.
Well, that's good to know.
Alex,
That would have been really sad.
We can't talk about people who aren't here, right?
I know, I know.
But
Listen,
she may be listening right now. And listen, if you
props
threw a
to
show
her.
tune at her, she would crush it. Absolutely.
And props to her. She's like, listen, I'm not going to know this. So, I mean, she's so transparent. It's so great. I love it.
All right, Dave Wilson, we will catch up with you just after the close of trading.
Prisoner, though, man.
So.
You better watch his back.
Yeah, seriously. Wow, he came in hot on you.
Jeez. I saw him at the office on Monday.
Yeah.
You know, had
How
a little
quickly they
chat.
forget.
I know, man.
It's too bad. You guys have known each other for a long time, too.
Long time.
It hurts.
I'm placing new order to sell short Japanese yen at 106.025. New order placed to sell short Japanese yen at 106.025.
Close of the session.
Yeah.
Or pretty close to it.
Interesting that I'll be interested to sort of dig into a little bit about why that may be the case. We've also got some interesting conversations coming up. Speaking of education, we've been talking a lot about that at the president of Morehouse College.
If you followed my Twitter feed, you'd understand what Vince Signorella said about why we dipped lower. I'm just going to say. I'm a little hot today. All right, let's get back to World and National News headlines. Back on over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. The White House and Democratic leaders are talking again about passing an interim spending bill to keep the economy going. Bloomberg's Irv Chapman has more from Washington.
Speaking outside the rain-swept White House, Chief of Staff Mark Meadows suggested chances are improving to pass what's being called a skinny bill.
I think the outlook for a skinny deal is better than it's ever been, and yet we're still not there. If Speaker Pelosi moves forward a single bill on postal, that's the first indication we have that she'll do a skinny bill, because that obviously postal was part of the negotiation. Let's add in the things that we can agree upon.
Speaker Pelosi has said she might postpone action on additional spending until after Election Day, on the assumption voters will give Democrats a boost. In Washington, Irv Chapman, Bloomberg Radio.
Several civic organizations are taking the U.S. Postal Service to court to force a reversal of cost-saving measures that have been described by some as politically motivated. Mark Morial is the president of the National Urban League, which is part of the lawsuit. He tells Bloomberg it's not enough to hear the Postmaster General say he's halting changes.
Those mailboxes need to be put back exactly where they've been, number one. Those sorting machines need to be put back into place at every postal operations center. The hiring freeze needs to be discontinued so that there is sufficient personnel.
Postmaster General Louis DeJoy will be taking questions from senators on Friday, from House members on Monday. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly and Carol Masser, and this was a story you sent around this morning. The Carlyle Group, well known to our audience, big private equity firm based down in Washington, big office in New York as well, offices all around the world, basically saying to its employees, if you're going to take public transportation to the office, don't.
Yeah, that's basically what they're saying. They said they must avoid public transport on their commute, and if they use public transport over weekends, they should work from home for 14 days.
Yeah.
They're expected to walk, bike, or drive to the company's offices in New York and Washington.
And listen, I think every company is dealing with this in a slightly different way. No one knows what the right answer is. It sort of comes down to the same conversation we're having around schools, and especially for, candidly, higher-end, affluent companies. Carlyle is certainly one of those. You know, many of the folks who work there, probably the vast majority of the folks who work there, have the opportunity to work remotely. Candidly, they probably have the ability to take a private car or something like that.
Right.
Whatever it is to get to the office. But, people are worried about their safety. I have to say, I haven't taken the New York City subway, nor have you, I don't think. I did take the commuter train, the Metro North, a few weeks ago, and I will say it felt very safe, felt very clean. Although one of the things I think folks are worried about is not the physical space, it's the other people.
Well,
that's the issue.
We talk about this at home, that, okay, you can clean everything, right, and it's wonderful, but all it takes is one person, 1 minute or 1 second that has the virus to be in that space, and that's all it takes.
Right.
And so that's what makes it
you
so
somehow
tricky.
being exposed to that person, or, we're learning more and more about, feels like surfaces are not the problem. It's other people and their ability, even if it's unwitting, to transmit what's going on. So.
But listen, we've seen the financial sector, right, largely still kind of working from home. Those offices are empty, so we'll have to see what happens come fall. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
47 past the hour. Let's get you caught up on market action with about 13 minutes to go in today's trading. We are on the back foot now for the major market measures, and the S&P and the NASDAQ each down from record highs, with the S&P showing a weakness by about 0.5%. Similar decline for the NASDAQ comp, and the Dow coming in by about 0.3%. So the market has been, since 2 p.m. Wall Street time, digesting minutes of the last Fed meeting. Generally speaking, the tone was dovish. Policymakers downgraded their outlook for growth in the second half of the year. There was also this indication that more accommodation may be necessary. Fed officials did see a rebound in consumer spending when they discussed the economy at the last meeting, but they repeated their view that the path of the recovery is clearly dependent on containing the virus. And these minutes also reflect a little bit of skepticism on the benefits or the cost of adopting yield curve targeting, and they were also, the minutes were largely silent on the prospect of changes to either the size or the composition of the Fed's purchases of U.S. Treasuries. Speaking of Treasuries, 10-year right now is virtually unchanged. We've got a yield of around 68 basis points. Talking earlier about the historic day for Apple, earlier when the stock was trading higher by more than 1%, and it gave the company a market cap of about $1 trillion. Apple shares higher, but off the best level of the day. Target reported sales above estimates. That stock is rallying by more than 12%. That's a quick look at market action. I'm Doug Krisner with your Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, it is time for the drive to the close, and as we head toward that, we're about 11 minutes away, less than 11 minutes away. Let's check in with Michael Cugino, President and Portfolio Manager for the Permanent Portfolio family of funds. He joins us on the phone from San Francisco. Michael, how are you? How are things in San Francisco?
Good afternoon, Jason. Pretty good, although we've had a few fires, north and east of the city, Tahoe area, the wine country, which is making the air quality not quite as good. We had a lot of dry thunder and lightning earlier in the week. Didn't amount to much rain, but some of that lightning hit the ground and caused some fire. So it's creating an early start to the fire season, which has been difficult.
Yeah, well, and on top of, California, and I know Northern California and Southern California have had sort of a different experience of late and really throughout the pandemic, but I tell you, I know it's not getting any easier for you guys out there. And yet, in the midst of all this, we have a market that continues, even if we're off our highs today, to grind higher. What do you make of this? We're asking everybody we can talk to about this seeming disconnect between a pretty scary underlying economy, a health crisis, and a market that is setting records.
Well, it's not unusual for the stock market to not exactly correlate to the broader economy. I mean, for the better part of the 2000s, I mean, you had, roughly 1 to 2% GDP growth, and you had stock market annual returns up in the teens to 20% or more. So it's nothing unusual. The stock market is predicting future economic activity in all likelihood. Some of the things that are driving the stock market, a lot of the gains are centered in a few industries like technology, information services, communications, that are doing very well in this downturn versus other broader economy industries that are more cyclical, that are more dependent on human labor and raw materials and those sorts of things.
I have to jump in. 2000 didn't end so well.
No, I mean, that was the beginning of the 2000 recession. You had a 10-year run at that point that are we talking 2019 or are we talking about 2000 itself 20 years ago?
Well, I'm just saying, you said, we've seen market disconnect before from kind of what's going on in the real economy. And I'm just thinking, you mentioned, the 2000 run up and it didn't end so well. And I do wonder if you think we're so disconnected We have seen it before, but do you think this isn't going to end well?
Well, at some point, I mean, to me, there's a broad long-term correlation between stock market performance and the economy, because stocks are driven on the basis of the health of the economy and the ability to own the companies that make goods and services and that sort of thing. So you do have a broad correlation over time, but in shorter periods you can have all kinds of anomalies that make it so the stock market has a great year and the economy does not, or vice versa. And what I'm saying is that in this particular environment, you have one of those. You have investors anticipating a better economy coming out of COVID. You have certain industries that are driving a large majority of the market gains that have been doing better than the overall economy during this period of COVID. So therefore, the stock prices of those companies are going up and maybe giving a warped picture of the broader stock market in light of the weaker, broader economy. So there's anomalies even now that make it so that, again, it's not unusual for the stock market to not exactly track the broader economy.
Talk to me about silver and gold, Michael, because I know that that's something you've taken a look at, and I know it's something that's been on the minds of a lot of investors out there. How do you factor those precious metals into the investment thesis?
Well, in our program, we believe that, you know, owning those assets are an integral part of long-term wealth building, and so a failure to own them leaves a hole in your strategy. So our view is to not only own stocks and bonds, but also own commodities, natural resources, real estate, and gold and silver as asset classes. So we believe in them long-term. And when you look at the environment right now, with the Fed backstopping everything, with the likelihood of even more stimulus that we've already created, with the ability of that stimulus to get onto Main Street, which was not true 10 to 12 years ago. It stayed mostly in the banking system to recap the banks. You know, you have inflationary pressures or potentially expected inflationary pressures when the economy begins to grow again. Not only that, but the uncertainty factor created by COVID. I mean, to me, there's still a lot of uncertainty with respect to really what's happening. And until that gets solidified, I think you could go in a number of directions. So when you add all this up, it's not surprising that the prices of gold and silver have gone up, and will likely continue to do so. Keep in mind that gold really didn't do much for most of the odds. I mean, it was pretty benign, and it's begun to move again. So there's some valuation catch-up, but also the conditions are fertile. Negative real interest rates across the curve is another big one, and I don't see that changing anytime soon. So there's room for gold to go even further, and silver as well. If you look at it on a valuation basis, you know, the value of an ounce of gold is about 0.6 of the value of a share of the S&P 500 index, a valuation metric we haven't seen since the middle of the aughts, around 2007, 2008. So it's not overly valued, even though it's had a big run. And again, it didn't do much for years. So there's a catch-up period that is factoring in as well, and investors are rediscovering it given this overall backstop, and I think that's why you've seen the moves you've had. I would also say that it's a volatile asset. It can go up and down $100 pretty quickly, so investors need to understand that. But generally speaking, if you buy it and hold it, and you look back years after you bought it, you're generally up. There's a strong correlation between the value of gold on a long-term basis and the creation of the money supply and liquidity and credit, and I don't see that changing at all. So for a long-term investor, pick your spot, and definitely you want to hold some.
Well, really, really thoughtful, as always. Michael, thank you so much. Michael Cugino, he's president and portfolio manager at Permanent Portfolio Family of Funds. They've got roughly $2.2 billion in assets under management. The Permanent Portfolio Fund, by the way, in the 96th percentile for funds in its category over the past 5 years. It's up nearly 8% annually in each of those 5 years. So he's had quite a run. All right, stick around, folks. We've got, what, Jason, about 3.5 minutes to go.
We do. That is correct. We've got that. We're going to get you to the close of trading. We'll have Dave Wilson's stock of the day.
I'm canceling order to sell short Japanese yen. It moved too far. We'll wait for better time.